Hi everyone, it's McDonald here. Thank you for joining us for this week's US equity markets commentary. Starting here with the Russell 2000 contract, you can see we had a really strong up week last week. Had a really good rally from down around 820 all the way up to 850. Note that as we touched 850, which is these previous highs back here on the chart, we touched 850. We just had a little bit of a sell-off on the close on Friday. So just came up, touched it, had a little bit of a sell-off of about 5 points, or 4.5 points back to around 845.50, where we closed for the week. So it just proves, evidence that little bit of resistance up there that we've got. It's a test now for price to push up through there. However, it's starting to look more and more like it probably will, based on the fact that the other major cash markets, the other major index markets, don't have anything in the way like the Russell does. But a few things here. We are overextended now from the averages. We had a good strong rally, due a bit of a pullback at some stage. A sensible place for a pullback will be back into about this 830 level, these old highs, which by the time it pulled back to there would also be pretty much pulling back into the moving averages, because remember they will continue to move up as price pulls back. So around about 830 would be a sensible place for price to pull back to, but nonetheless this is starting to look strong. I'm not a huge fan of the daily chart, and simply because as we've been trending up, notice in a good strong uptrend we continue just to make higher highs and higher lows. What happened here, we put in a lower high followed by a lower low, hence turned to downtrend temporarily, but then very quickly made a higher high. Now an uptrend is higher highs and higher lows. What we've got here is a lower low followed by a higher high. That means there's no clear definitive trend there on the daily chart, so it's still not looking super strong, even though the buyers are undoubtedly winning. Coming to the weekly chart, apart from that resistance, that major high there, we certainly have an uptrend intact. We've pulled back into the buy zone and we've made higher lows. We're now breaking up to higher highs, and it's looking quite strong indeed. Monthly chart still looking overextended. However, like I say, it's a monthly chart, and monthly charts can take a long time to pull back. This could be a year before it pulls back. However, I will remain bullish in the shorter term while still keeping a very close eye on it for a bigger pullback on stocks to come at some stage. But right now looking bullish to the upside. Now, even though the weekly looks particularly strong, the monthly looks a bit overextended, but the daily is looking a bit overextended as well, only in the shorter term, and also not a clear trend in the daily chart. What I really need to see is a pullback to a higher low and then a push on, and then we'll be back into uptrend, and then the daily and weekly chart will be back in agreement. Then I'll like it more on a swing trade basis, i.e. I'd be looking to hold positions for days and weeks. In the shorter term, I'm really looking for intraday trading. I'll come back and have a look at some intraday charts in a moment and show you some of the ways I trade that way. But let's just quickly have a look at some of the major cash markets here. Let's look at the Dow. And the thing is, the Dow's coming up and just testing this previous high. But if we come onto the weekly and zoom out, unlike the Russell, we just don't really have anything in the way. So probably around 12.7 is the next point of resistance, and if we can just nudge up through these highs where we're at right now, we probably should be getting up and testing that, maybe even testing up towards 13,000. So the Dow looks strong. If we come to the Nasdaq, now this is the one unusual thing which still doesn't make me feel completely at ease with the bullishness of the markets. That is that the Nasdaq is still making lower highs here on the daily chart. We've still got lower lows, we've still got lower highs. So until I see the Nasdaq break up through here and the Russell break up through those major highs and that major resistance, I won't be completely convinced on the bullishness of the markets. But at the moment, it's pretty hard to deny that buyers are in control, that the momentum is to the upside, and we want to trade where the momentum is. I'd much rather the momentum was more convincing than it is right now. So it's not completely, it's not, I'd like to see 80-90% conviction to the upside. I don't quite have that, but I have around about 60 to 70% conviction, which is enough for me to say I want to trade with that momentum. I just don't want to hold positions for days, weeks, and months right now, simply because I don't have enough conviction that the prices will continue going that way in that space of time. However, if we just come back now and have a look at where I do have the conviction, reminding you first of all what I'd like to be seeing is this daily chart to have a pullback, put in a higher low, and then push on. Once it's done that, the daily and weekly will be in agreement, and I'll like it on a swing trade basis. I'll be prepared to hold for days and weeks. In the shorter term, however, this is the kind of action, the kind of chart where there's a good, strong trend, good price action, and that this is a 2-hour chart. You could look at a 1 hour, a 2 hour, a 4 hour, even an 8 hour chart, and what you'll see is much better price action, much cleaner trends, nice consistent higher highs and higher lows. Notice how it moves up, pulls into the buy zone, up into this buy zone around the 10 and 20, up and into the buy zone. So as we pull back into these zones, these are sensible buying points, sensible places to be trading intraday, sensible places whereby I am looking to confirm the strength of the trend, but then looking at the candlesticks in and around that zone to confirm my entry into the trade, and trading more aggressively on an intraday basis right now, as well as doing things like the gap, which I've talked about for the last few weeks. I go all the way down to a 1 and 2 minute chart to trade the gap on the Russell. The gap on the Russell's been fantastic. Intraday opportunities, the pullbacks to the moving averages across 1 hour, 2 hour, and 4 hour charts have really been providing fantastic opportunities this last week or two. That's likely to continue, and as in if we get a pullback, I'll be looking to re-enter based on the daily chart as well, looking for this move to the upside all the time. And I'll probably say this every single time until we get a decent pullback, all the time being cautious in terms of longer term. We are well overdue a pullback, a bigger pullback than we just had. One other quick thing, and that is that we've put together this trading symposium for earthquake victims. We have got some of the biggest name traders out there in the world, including Mr. Larry Williams, Linda Bradford-Rasky, Jack Schwager, Larry Pesavento, myself. A whole host of big name traders are coming together to speak for free and to donate their time for free to teach you how to trade. And all we're asking for from you is that you will make a donation to the Red Cross for either Christchurch or Japan. So you can come and have a look at the website, get all the details and the details of all the speakers and how this event will take place. And all we ask you to do is to come and click on register donate and make a donation either to Christchurch or Japan, or preferably to both if you'd like to. And once you've made that donation, you'll be entitled to join a whole host of webinars from some very big name traders that will be running throughout May this year. I hope that you'll join us, and I look forward to speaking to you again next week on The Update. Happy trading all.